This is Horizon's Middle East and Africa, our top stories this morning. Israel edges into Rafah after taking control of a key crossing. Tensions remain high as talks stall. Stocks in Asia slide following a sluggish U.S. session, with investors split on whether the market can sustain this month's rally. And Ghana's Supreme Court set to hear legal arguments today on a proposed anti-LGBTQ law. Well, it's just gone 8 a.m. across the Emirates. I'm Joumanna Bercetche here in Dubai. As ever, let's just get you up to speed on how markets are faring. We are trading sideways for the S&P. 5,200 has been a key level on the upside, struggling to break through that. Today, futures are pointed basically around flattish. The two-year yield also giving up some of the gains from earlier in the week. Today, you can see we are slightly higher in trade, sitting above 4.83%. Some hawkish comments coming through from Neil Kashkari. We'll talk more about that later on the show. Also keeping a close eye on the dollar today, up about 0.2%. And then finally, Brent, also you can see dipping somewhat, down about 0.4%. Despite the geopolitical premium building, we are going to be talking a lot more about what's been happening with Israel and Rafah in just a few moments. One stock in particular I just want to draw your attention to is UBS, major outperformer yesterday in the European session, up around 8%, its biggest jump since that takeover was announced last March. So a very strong reception to the results that UBS posted yesterday, both on the top and bottom line, in addition to their capital distribution plans. That was the picture, one of the major outperformers in the European markets. But let's also check in on how markets in Asia are faring this morning. Avril Hong is in our Singapore studio. What is on your radar today, Avril?
Yeah, we're looking at how Asia stocks are treading water, the declines today being led by Japan. And this is following on from the U.S. stock performance overnight as those string of gains sputter. And today, the tech shares in Japan are coming under pressure, but focus also shifting to earnings. We have the likes of Toyota reporting later today. I'll talk more about the automakers in just a bit, but keeping an eye on dollar yen as well, as we got Ueda tweaking some of the language related to policy response from the FX moves, but that's not helping the Japanese currency at all, still sitting above 155 against the greenback. Flip the board, because we talk a lot about how the weak yen is helping automakers in Japan, but if you take a look at the last quarter, that's relationship that's broken down as we see the automotive index that's declined about 4% as the Japanese currency weakens about 2%. So that'll be key to watch as we keep an eye on earnings today, Joumanna.
Thank you, Avril, for that overview. Now, the U.S. has paused a shipment of bombs to Israel last week over concerns about a looming invasion of Rafah. That is according to a senior administration official who adds the shipment was supposed to contain around 3,500 bombs. Meanwhile, Israeli forces have taken control of the Rafah border crossing for the first time since the fighting began in October. When it comes to ceasefire talks, the Biden administration believes Israel and Hamas should be able to resolve their differences. Bloomberg's Middle East and Africa economy and government editor Paul Wallace joins us once more. So let us just talk about the developments in Rafah overnight. What we know is that Israel has taken control of the border crossing at Rafah, but it seems that they've stopped short of the full ground offensive that had been talked about the last couple of months.
Hi, Joumanna. Exactly. So far, that's as far as Israeli troops have gone. They seem to face little resistance yesterday morning when they went in and took over the crossing. They said they were acting on specific intelligence. They accused Hamas of carrying out what they call terrorist operations through that crossing, which is the main point of entry for aid into Gaza and sits on the border between Egypt and the Palestinian territory. But so far, Israeli troops have not gone into the rest of the city. Israel's government continues to say that it will launch an assault there because it says that several thousand Hamas fighters are in the city, but that it will allow civilians to leave beforehand. There are more than 1 million in the city, maybe 1.4 million. They fled there, most of them to seek refuge from the war when it started in October. Almost the entire rest of the world, including the US, has grave concerns about any assault, and few people think it's feasible to get civilians out in a safe manner and quickly. But Israel says that it's got a plan to do just that.
Well, reports saying that around 100,000 people have already been moved close to the border crossing. But of course, the big question is about that other 1 million plus still in Rafah. What has been the response from the international community? And I think it's interesting to note these comments from senior officials in the U.S. government saying that they actually had suspended the supply of bombs to Israel throughout the course of last week in anticipation of this potential ground offensive. So that tells you that the U.S. isn't fully on board.
It certainly does speak to how concerned the U.S. is. The U.S.'s official position is not that no offensive on Rafah can take place at all, but that it cannot take place until the civilians have moved out. However, in reality, it's clear the White House and Joe Biden himself don't think that's possible, and thus there shouldn't be an assault of any kind on the city. I think these reports we're hearing about the delays in shipments of offensive weapons speak to the tensions that have just been growing and growing between Israel and the U.S. over the last few months. The EU's come out, its foreign policy chief, Josep Borrell, he said that the EU had made pretty clear to Netanyahu, Israel's prime minister, that an offense on Rafah should not take place. As far as he was concerned, what we've seen in the last few days is the start of that assault. So he's saying it's already begun. Israel is downplaying that and saying, no, this is not an assault on Rafah. It's a very limited operation so far.
All right. Very good context to have there, Paul. That was Bloomberg's Middle East and Africa economy and government editor, Paul Wallace. Well, Palestinian officials say all aid from Egypt has stopped since Israel took control of the Rafah border crossing. Rafah and Kerem Shalom are critical entry points for the flow of food, medicine, and other supplies into Gaza. Let's bring in Kate Phillips-Barrasso, Vice President of Global Policy and Advocacy at humanitarian organization Mercy Corps. Thank you for joining us this morning. Kate, before I go into our conversation, I just want to confirm with you that you are humanitarian, you're part of a humanitarian aid organization with actual people on the ground in Gaza. How many people do you have on the ground right now?
That's correct. Mercy Corps has worked in Gaza since 1986, and as of October 7th, we had 70 staff in country. As of now, we have 40 remaining staff in country, mostly in and around Rafah.
Okay, so that is good context then, because we would like to hear from you about some of the difficulties of the aid passage into parts of Gaza. I was just speaking to my colleague Paul about Israel taking over the Rafah border crossing overnight. What are the implications on humanitarian aid and the passage of humanitarian aid into the Gaza Strip?
Well, there is massive implications. I mean, just by way of additional context, just to bring us forward to the moment that we're facing right now, after 7 months of bombardment and the total siege of Gaza, in which water, electricity, commercial supplies, most fuel has been cut off. We have 34,000 people who have been killed, 14,000 of which are children. And as of late March, we had 1.1 million people who were in Category 5 acute food insecurity, which basically means that they are actively facing famine. So this situation was already incredibly dire in the lead up to this week's events, and having the Rafah border crossing closed will only add fuel to that fire and make this far more difficult. Not first because people will have to move. Again, this is a limited incursion at this time of Eastern Rafah, but it may develop into something much larger for all of the area of Rafah, where over half of Gaza's population had been sheltering in relative safety. So people will have to move, which I can get into in a moment. But having the actual crossing closed and Kerem Shalom closed means that no aid will be coming in, which will make the situation I just described far, far worse.
Well, you talk about people having to flee or move to these so-called safe zones. How easy is it for the population to move around and actually get access to those safe zones?
It's not easy at all. Roughly 1.9 million people in Gaza have been actively displaced since the beginning of this crisis. And when I say displaced, I don't mean one time. Some people have been displaced, including our staff, which you kindly asked about, multiple times as the military activity has moved from the north through central Gaza and down to the south. So they are exhausted. They have limited means, and they have, limited resources to make this journey along what I might note is also a perilous route. There's a lot of unexploded ordnance in areas of Gaza that have already faced fighting. And if people make that journey, which is very difficult, as I described, they will arrive in areas of Al-Mawasi and Khan Yunis that have virtually no infrastructure, no clean water, no electricity, no real housing materials. So there won't be very many aid organizations there to greet them just because of these conditions. And so they are being pushed into a situation of incredible danger where we expect these hunger numbers to dramatically rise and the amount of communicable disease also to arise as people are crowded into areas where they have no health services.
Kate, can I just ask you, as an organization, what are you advocating for at this point in time?
At this point in time, we're unfortunately advocating for a lot of the things that we have advocated for since late October, which is a durable, first and foremost, a durable ceasefire in Gaza. And this is not from an ideological perspective, but from an operational perspective. It is impossible for aid organizations to safely deliver aid at scale to people who need it in Gaza without a cessation of hostilities. Also, the death count will continue to rise, and the civilian infrastructure will continue to be destroyed and pulverized as it has, unless we see a durable ceasefire. And the reason I say durable is the diplomatic negotiations are sort of snagged right now, particularly on a point of how long that ceasefire would last. And while a temporary ceasefire would be very helpful in terms of a pause so aid can get in and people can have a break from this violence, we don't want to also postpone the inevitable of a significant incursion in Rafah that would cause major damage from a humanitarian standpoint. So we don't want to delay that. We want to make sure that undue harm does not come to people and that the suffering in Gaza doesn't deepen. Lastly, we are asking for an end to the siege of Gaza, which has really been driving the humanitarian needs in country this whole time. So turning back on water, electricity, telecommunications, and allowing commercial traffic, because no amount of humanitarian aid will ever be able to replace those basic necessities of life that existed before the events of October 7th.
Kate, we're going to leave it there. Thank you very much for joining me today on the show. That was Kate Phillips-Barrasso, Vice President of Global Policy and Advocacy at Mercy Corps. Up next, we will also get the market outlook with Banque as investors seek firm evidence of an earnings recovery before taking the stock rally further. This is Bloomberg.
I think the most likely scenario is where we are right now, which is just we stay put for an extended period of time until we get clarity on, is disinflation in fact continuing or has it in fact stalled out? I don't think we know the answer to that, so I would say the most likely scenario is we sit here for an extended period of time.
Minneapolis Fed President Neel Kashkari speaking at the Milken Institute Global Conference in Beverly Hills. Let's bring in Charles-Henri Monchau, the Chief Investment Officer at Banque on the show today. Wonderful to have you with us.
Thank you.
Maybe let's just tie in some of the commentary that we've heard, not just from Kashkari overnight, but also linking back to the Fed Chair Jerome Powell last week about the trajectory of monetary policy in the U.S. going forwards. And I thought it was quite interesting last week that the Fed Chair pushed back against the possibility of rate hikes, and yet you have one of the more hawkish members of the committee, Neel Kashkari, saying that, well, we have to be careful. We have to be sure that inflation is on the right track before we start cutting interest rates. It doesn't seem as though there's unanimity on this panel.
No, true, but we know he's a hawk, definitely.
Right.
So there was no surprise yesterday that he shifted, let's say, the pendulum towards a possibility even of a rate hike. But I think Chairman Powell was quite, let's say, clear last week, pushing back, stagflation fears, but also, I think that was very important, tackling the quantitative tightening, tapering, let's say, idea. And I think that was a positive surprise for the market, that both in terms of timing and amounts, that, they might indeed taper quantitative tightening. I think that was a positive message. But again, we know that the Fed wants to see more data coming, that they are likely to stay put. We still believe that the next move is going to be a rate cut, but indeed it might be later than expected. And after a first rate cut, they might, stay put also for some time, let's say, to see, next data, what they are telling us in terms of inflation, but also in terms of growth.
It's funny because at the beginning of the year when I was having these conversations, the talk was about not just when were the Fed going to get going, but also where they would end up. Yep. And I think now the narrative has really evolved in the sense that the market is expecting the Fed to start cutting interest rates later, but also end up at a higher rate than they were before. Yep. That has implications on assets. Yeah,
well, a higher terminal rate does have implication indeed. But, when we look at monetary policy, we like to look at financial conditions, overall. If you look, for instance, at the Goldman Sachs Financial Condition Index, it's still very low. Right. So that means it's still a positive for the market. And that's something we need to take into account. And look at M2 supply growth. It turns positive for the first time since December 2022. So we still have inflation being sticky, but at the same time we have loose financial conditions and monetary growth, which is turning positive. And this is why, by the way, we still prefer equities over bonds. Yeah. Is despite the fact that we are not seeing interest rate cuts, in the coming weeks or months, financial conditions remain supportive for risk assets. Yeah, that's a very good point about the financial conditions aspect of it. Let's talk about equities. Yeah. S&P sitting around 5,200. It feels like it's struggling to break through that level. Will it break? Can it break? Do you think that we're going to keep moving higher? We think it's kind of, let's say, normal to have, to see some momentum fatigue after the very strong run we had since October. There have been, let's say, various factors, preventing the S&P 500 to move higher. Geopolitical risk was one of them. These interest rates, let's say, uncertainties is another one. And then we started the earnings season with some doubt, due to banks' results. Now, if you look at the earnings season, we're talking about a beat rate, companies on average beating expectations by 7%. So it's still quite good. So we still have these earnings tailwinds for the markets, uncertainties regarding oil prices, uncertainties regarding interest rate hike. But I think what was also very interesting last week was a job number. Yeah. To us, Friday was a Goldilocks report because you have unemployment rate ticking, higher, but still below 4%. You have early earnings, growth decelerating. So if we have these kind of, let's say, market context where we have earnings growth, being a tailwind, at the same time, the next, let's say, rate move being a cut. We don't know when, but it's still going to be a cut. That's what the market expects. Again, it's a very decent background for equity markets. Yeah, I take that point, but then also, there is a lot baked in already. And I thought it was really interesting in this earnings season, yes, that the surprises to the upside have come through, but the market has not rewarded the companies that have come out with a positive surprise. And if anything, they've punished the companies that have missed. Right. What does that tell you about positioning? Yeah, we entered the earnings season when you look at, for instance, CTAs, or they were positioned hedge funds, and also the cash held by long-only managers. Definitely, there was some catch-up in terms of long positioning. So this is why, as you rightly mentioned, the bar was quite high. But still, if you look at the guidance, it gives, let's say, some comfort that indeed companies might be able to deliver later this year. Also, if you look, very important thing, cycle. We are in presidential election year. Yeah. Usually there is indeed some kind of pullbacks in April, May, and then the summer historically is more positive because the markets start to look, at the presidential election and potentially some fiscal, support coming, and potentially also some monetary policy support coming. Yeah, well, we'll save that conversation for the next time you come on the show because there's a lot to discuss into the U.S. elections. Thank you for joining me so much today. That was Charles-Henri Monchau, the Chief Investment Officer at Banque. Thank you very much. Also coming up, Ghana's anti-LGBTQ bill is being challenged in the Supreme Court today. We discuss the impact next. This is Bloomberg.
it's estimated that Africa is missing 4 million health workers, and we're not going to have enough finance to come up with that. And so the idea that we should take these AI capabilities and create that, it's very, very exciting.
Bill Gates speaking at the Global Solutions Summit in Berlin about harnessing AI to help with Africa's health challenges. Now, Ghana's Supreme Court will start hearing legal arguments today on a proposed law that seeks to punish people identifying as LGBTQ with up to 3 years in prison. For more, Bloomberg's Ondiro Oganga in Kigali joins us now. Ondiro, it sounds like this bill is going to have huge implications, both socially and potentially financially as well. But maybe let's just start off with an overview of the details of the bill. What does it actually propose?
Joumanna, this bill proposes jail term for those who identify as LGBTQ, those who fund LGBTQ activities, and also advocacy. If you also know somebody who is in the queer community and you don't report them, you could also face consequences. And just to put this into context, nearly 35 African countries have made homosexuality activities illegal, but Ghana's bill is considered one of the harshest, right alongside Uganda's that prescribes aggravated, or rather prescribes death for those convicted of aggravated homosexuality activities. And there has been consequences. In Uganda's case, for example, they were frozen out of the World Bank funding, and the U.S. excluded them from preferential trade status. And the same will apply to Ghana. The U.S. State Department has made it very clear that if this bill becomes law, it will have chilling effect on foreign direct investment and also tourism. The irony is their president is a human rights lawyer, and he's very smart. He knows that the consequences are coming. At the beginning of his tenure, he was very staunch against anti-LGBTQ, but right now he is lukewarm. When Vice President Kamala Harris was in Ghana, he said that he was hoping that Parliament would be sensitive to human rights, which just means that nobody knows whether the president will assent to this bill post the Supreme Court.
Ondiro, thank you so much. Also worth bearing in mind for anyone who's watching this, Ghana is in the middle of a restructuring program, $20 billion on the line here. Questions about World Bank are going to have to respond to this bill if it does actually get passed into law. So it is also interesting from a financial perspective. Let's get a quick check on cocoa and coffee. Those commodities have been in focus the last couple of days. We have seen a spike in cocoa yesterday, up 13.5%, the biggest jump since 1960. Coffee slightly higher as well. We'll be right back in just a few moments. This is Horizon's Middle East and Africa. Our top stories this morning. A senior White House official tells Bloomberg the U.S. paused a shipment of bombs to Israel over worries about a wide-ranging military offensive on the southern Gaza city of Rafah. Stocks in Asia slide following a sluggish U.S. session, with investors split on whether the market can sustain this month's rally. And Ghana's Supreme Court set to hear legal arguments today on a proposed anti-LGBTQ law. Well, it's just gone 8:30 a.m. across the Emirates. I'm Joumanna Bercetche in Dubai. Let's get a check on these markets for you. The S&P trading sideways. The future is pointing to a flat open. This after struggling to break through 5,200 to the upside. A lot of Fed commentary still coming through. We heard from Neil Kashkari yesterday, one of the more hawkish members of the FOMC, suggesting that rates may have to stay higher for longer. So clearly that having an implication on some of these financial assets. Two-year yield has moved higher, about 3 basis points higher, but still around 20 basis points since the FOMC meeting last week. We can see the U.S. dollar also trading slightly firmer as well. And then Brent crude also sitting a little lower today, down about 0.5%. And again, all eyes on that OPEC meeting in a couple of weeks' time. The EIA yesterday saying that they don't think that there's going to be a change in production. So something to watch out for. In terms of stocks, there's one stock that did extremely well yesterday in European trading. That is UBS. You can see it was up almost 8%, its biggest jump since that acquisition deal of Credit Suisse was announced about a year ago. But the reaction in the market was pretty positive as the stock beat on both bottom and top line, in addition to reconfirming their capital distribution targets for the year. So very solid results out of UBS yesterday. Let's check in on how markets in Asia are faring as well. Avril Hong is in our Singapore studio standing by.
Yeah, Joumanna, we're seeing Asia stocks declining, snapping a 4-session winning streak, tracking the Wall Street performance. Today, Japan is leading those losses. Tech is under pressure, but we're seeing the automakers also losing ground as the focus shifts to the earnings. We're going to hear from Toyota at the bottom of the hour, but this week also from the likes of Nissan and Honda, and we'll figure out just how the cheap yen is playing into their corporate scorecards. Let's flip the board, because also declining today is the MSCI China, and that's despite a run-up from its January lows of 20+%. Flip the board if we can. I just wanted to show you the relationship that is so strong with the so-called Chinese Tech 8s, and this will potentially inform whether this rally that we've seen on these Chinese stock benchmarks will go further, especially given their outsized importance on this index and how we're watching out for their earnings into next week. The likes of Baidu, Alibaba, Tencent reporting. Joumanna.
Avril, thank you so much for that overview. That was Avril Hong in Singapore. Well, back to our top political news, geopolitical news from the region. The U.S. paused a shipment of bombs to Israel last week over concerns about a looming invasion of Rafah. That is according to a senior administration official who adds the shipment was supposed to contain around 3,500 bombs. Meanwhile, Israeli forces have taken control of the Rafah border crossing for the first time since the fighting began in October. When it comes to ceasefire talks, the Biden administration believes Israel and Hamas should be able to resolve their differences. So let's bring in Tina Fordham, founder and geopolitical strategist at Fordham Global Foresight. Tina, good morning to you. Thank you for getting up so early to speak with us on our show today. There is a lot going on in the world of geopolitics, which is right at your wheelhouse. Let me just start with everything we're hearing from Israel and Rafah overnight. And the context of all of this is there is supposed to be negotiations going on vis-a-vis a truce deal. How likely is it at this point that we are going to get a truce deal between Israel and Hamas?
Well, nice to see you, Joumanna, and hello from London. Unfortunately, I'm not very optimistic about a breakthrough on the talks and a ceasefire, even though the situation is incredibly urgent and both Hamas and the Netanyahu government face huge pressure from their erstwhile supporters. And of course, the humanitarian situation is absolutely dire. The reason is that for neither side have the costs of this conflict and frankly, the risk of alienating their supporters become too high. Right? I call it Schrodinger's ceasefire. Now you see it, now you don't.
Well, Israel's goals have been, one of the goals obviously is to neutralize Hamas, the other to bring back the hostages. Should this ceasefire actually be agreed to, what does that tell you about their efficacy at implementing one of the goals? Because 7 months in, Hamas are still very alive and present.
Well, that's right. And there's been a lot of discussion about whether, by the defined, the stated objectives, whether the Israeli government's operation in Gaza can ever, really be effective, because as has been said, you can't eliminate an idea. And with that in mind, there will always be supporters for movements like Hamas and its ilk. So with that in mind, I'm not confident about a ceasefire, perhaps a pause. But as we well know, ceasefires are historically a chance to rearm. And that's why I think we see both sides dragging their feet. For Netanyahu, this conflict is existential. When the war ends, his political career is finished.
Let me ask you about the broader implications for the region. Bloomberg and other outlets have been reporting that the U.S. and Saudi Arabia may be close to a defense deal, a normalization deal, ultimately a pathway to normalization between Saudi and Israel. What would that mean for the region, and what do you think the likelihood of that actually getting through Congress is at this point?
Well, it's incredibly compelling, isn't it? That the idea that the blockages in the Middle East that have kept it from, benefiting from wider regional integration for so long could actually be overcome. And yet we have the same obstacle that we faced for so many decades now between Israel and Palestinians. The deal that's been presented is interesting to me for a number of reasons. And, we have to remember that we're in an era of the revival of great power politics, right? So that the influence that we see, the relationship between the U.S. and Saudi Arabia is a defense relationship. The Saudis and other GCC states look to Washington for security, and they want to keep the door open to China for commercial relations. This proposed deal between Washington and Riyadh is part of that. What's different from where we were in the autumn of last year, when a similar breakthrough seemed possible, is that the Palestinian issue is back on the table.
Yeah. Yeah. Well, you have coined this period in history the geopolitical risk supercycle. Why do you think this period of tension is so much more pronounced than previous episodes of flaring up of geopolitical tensions within the region and around the world?
This is my thesis. I came out with it before tensions reignited in the Middle East. And I think it's very important for investors and observers to understand that we are looking at a period of a structural increase in conflict. We can trace this back to around 2012. Conflicts are longer, they're more lethal, and they have more third parties involved, to my previous point. On the other side, we have fewer tools and interventions to help absorb the friction, whether that's liquidity from central banks, or coordination between the international community. And when we have these two factors at play, and for an extended period, as I see it, we get more of the kinds of disruptions, the event risks that we're seeing now.
Tina, very clear. We're going to have to leave it there. Thank you so much for joining me on Bloomberg Horizons today. Tina Fordham, founder and geopolitical strategist at Fordham Global Foresight. Lovely to see you. Now, Aramco has kept its $31 billion dividend payout to the Saudi government and other investors despite lower profit. The payouts are becoming increasingly crucial for the kingdom's economy as crude prices remain below the levels it needs to balance its budget. Now, for more, let's bring in Bloomberg's Anthony DePaola. Anthony, we were talking about Aramco yesterday, the preview into the earnings, and we said that your expectations that profits were going to fall. They actually did fall. Net income fell 14%, and yet no change on the dividend payout to the government. So what do we read from that?
Yeah, net profit a little bit lower than the expectations, actually, but the dividend bang in line there. That's because they had announced that dividend previously. It's based on the bumper earnings of 2022 when oil prices were very high after that Russian invasion of Ukraine, and then the earnings from last year, which were pretty good, even though they didn't reach those levels of the year before. So we've got 2 years of very good profit leading into that special dividend component, which adds on to the regular dividend. Aramco has said they want to make that regular dividend progressive, continuing to increase it, and they want to keep that special dividend, which is set for 4 payments this year. That's going to bring dividends to about $125 billion for this year. So that's a big payout. We were listening to the CFO, Ziad Al-Murshid, speaking yesterday to analysts, and he was saying that they're confident they can support that dividend while also paying out for their capital expenditure plan, keeping up those investments that are necessary to keep the oil production going that keeps those profits coming in.
I mean, it is interesting within the context of the Saudi budget deficit and the fact that this dividend is coming through. Clearly, we know the kingdom has big plans. They need the funding for those plans. So it makes sense that the dividend is still being paid in such a substantial form. But what did we learn yesterday about Aramco's path and forward path and vision for, well, I'm using the word vision, but how are they seeing the next 12 months pan out in terms of profitability?
Yeah, for sure. Well, there's a lot of vision in Saudi Arabia, and Aramco goes a long way to funding that. And of course, the base of that is the oil production. But what Aramco is doing is adding on other things now. They're getting big into petrochemicals now. They're expanding through joint ventures, refining, and then petrochemicals downstream, which will allow them to use some of that oil, use more of that oil in making things like plastics for consumer goods rather than transport fuels. And the other big thing is natural gas. So they're looking to get into LNG. Abroad, they have a huge project called Jafurah in Saudi Arabia, which aims to meet domestic demand first. Then possibly they'll do some blue hydrogen if there's demand for it. Possibly they could do some LNG export. But they want to buy up also gas assets abroad so that they can have some access to some LNG supplies and then do some trading. So they're looking to diversify that profit stream and have a more international viewpoint there.
Yeah, so even Aramco are diversifying as well, moving from upstream to downstream, it sounds like. Anthony, we're going to leave it there. Thank you so much for joining me on the show. Bloomberg's Middle East energy reporter, Anthony Di Paola. Now, the Emirates chairman says he is not happy with the delays they are seeing in Boeing deliveries. The airline is one of the biggest buyers of the 777X wide-body planes, but delivery has been delayed to the middle of next year because of certification issues. Now, I spoke with Sheikh Ahmed bin Saeed and Maktoum about that and the carrier's recent leadership reorganization.
I think you see with our new reorganization of the Emirates airline just recently been announced about nearly a couple of months ago, restructuring the business with the new guys coming in. It's much new within the organization. You know, when it comes to 10, that's something between us to decide.
Of course. In terms of possible successors, though, I know in the past you've talked very highly of the Emirates COO. You've also talked about the CEO of Fly Dubai. Are those the two main names that you're considering right now as potential successors?
Yeah, when I have, I mean, within the organization, you can always see the ones who are on the top, you know. They are most likely, they are the ones who will really, if there is any change, that they will step in.
And in your conversations with Mr. Clark, is there an understanding that maybe he'll stay on in some capacity?
No, I don't think we talk about something like this. We always talk about business and what is the future of Emirates and how we can really push the business and to see more business coming to Dubai and to the airport.
Yeah. Well, let's talk more about the business. You know, one of your biggest customers and clients that you deal with is Boeing, and the company has faced many issues in the last couple of months. We're talking about management changes, we're talking about planes being grounded. What do you think needs to happen there in order for people's concerns around safety to be allayed?
Yeah, when it comes to Boeing and what happened, I think if you are referring to the 777X and the delay that we see, I don't think we are happy, and also all the others who signed up for this aircraft. I met up with the new management just recently to touch bases. You know, they promised that they would be able to change things and make things go faster, and I hope so, you know, because for us, not saying we are stuck, but they are the only two players there. It's Boeing and Airbus. So we have that the 777 and the decision on the certification, that will be very soon.
What do you think management need to do to get things back on track again at Boeing?
You know, I think you need to work hard. You need to understand. You need to keep up with any promise that you promise I will deliver on that date. You should be delivering on that date.
Emirates Chairman and CEO Sheikh Ahmed bin Saeed and Maktoum there. Now, the head of Saudi Arabia's new investment fund for chips and AI technology says the country would divest from China if it were asked to do so by the U.S. Alat CEO Amit Midha told Bloomberg that the U.S. is its #1 market.
Saudi Arabia has a tremendous reputation of being dependable, being trusted partner, of supplying the energy for decades and decades it has been. We would like to hope to achieve the same sort of status in our semiconductor and AI side as well.
U.S. is the #1 market, U.S. is the #1 partner, and we hope we can partner more deeply. And trusted and secure is a key word for us.
Alat CEO Amit Midha speaking to Bloomberg on the sidelines of the Milken Institute Global Conference in California. Also coming up on Horizons, Disney shares take a tumble despite strong second quarter earnings. We discuss the disconnect coming up next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Joumanna Bercetche in Dubai. Disney shares tumbled the most in 18 months after reporting a tepid outlook for growth in streaming subscribers. That is despite strong second quarter profit beating. So Bloomberg's Charlie Wells joins us from London. Well, Charlie, despite the fact that Disney recorded strong earnings for the second quarter, we did see quite a dramatic fall in its share price. Are people just concerned about the future of the Disney Plus, the streaming business?
Yeah, Joumanna, I mean, that seems to be why Wall Street reacted negatively to what was otherwise a pretty strong report here. And so thinking about Disney Plus, I mean, that is crucial for the future of this company. And actually, in the previous quarter, Disney Plus achieved a historic first. They were profitable for the first time in history. But what investors really seemed to be reacting to was the fact that management said that there could potentially be subdued growth in its overall streaming business in the current quarter. So that was something that seemed to weigh on sentiment. But something else that was really important here as well was parks. So parks in 2023 made up 70% of operating income for Disney. And actually, management said yesterday that they also saw some subdued growth there as well.
You know, you talk about this subdued growth when it comes to streaming. What is the catalyst for that? Is it just that there's more competition? Is it because the market has become a lot more saturated? Is it a pricing issue? What does it tell us about the state of the consumer market right now?
It's interesting, right? It seems like every day there's a new streaming platform out there. And so I think that issue of competition is certainly one. I think this is one for Disney of investment as well. So, you know, they have made significant investments, not just in the U.S., but around the globe. One issue that they're dealing with is rights for cricket in India, which have been incredibly expensive, but of course could, in the long run, prove to be lucrative. And management yesterday reiterated the fact that they feel confident about streaming. CEO Bob Iger said in a statement that he believes that the overall streaming business will reach profitability by the fourth quarter. And this is really important because activist investors have been looming. You know, Bob Iger just won a very important battle with Nelson Peltz, and at the issue there was streaming.
Yeah, absolutely. And that's always going to be the question that gets put forward to them, despite the fact that other parts of the business seem to be doing well as well. Charlie, thank you so much for that overview. All right, coming up, Chinese President Xi Jinping is in Serbia on the second leg of his European tour. More on that trip. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Joumanna Bercetche in Dubai. Nintendo says it will soon announce a successor to its 7-year-old Switch gaming console after forecasting a bigger than expected profit decline. President Shuntaro Furukawa posted on X to say an announcement on the next hardware platform will be made in the coming year. That came after warning that operating income will fall 24% in the current fiscal year. Reddit shares jumped in extended trading after first quarter sales topped estimates, impressing investors with its first results as a public company. Revenue increased 48% in the period to $243 million. And the social network projects sales in the current quarter of up to $255 million, well ahead of the average analyst forecast. Donald Trump's criminal trial for allegedly mishandling classified documents has been postponed indefinitely. It's a significant victory for the presumptive Republican presidential nominee, who is facing 4 criminal cases and seeking to avoid multiple trials before the November election. Trump is currently in court on charges he concealed hush money payments to a porn star. And Chinese officials are threatening to release audio of a purported phone call with a Philippine military official that Beijing claims is evidence of an agreement over disputed territory in the South China Sea. According to a transcript seen by Bloomberg, the head of the Philippine military's Western Command agrees to a new model in handling resupply missions in the area. Manila has previously denied such deals. Let's take a quick look at how equity markets are faring as we head in towards the end of the show. Equity futures seen trading sideways, if not slightly lower. The S&P struggling to break through that 5,200 to the upside meaningfully. Nasdaq 100 also leaning sideways. We had some hawkish commentary come through from Kashkari yesterday, suggesting that rates will be higher for longer. The Dow also seen holding at around 39,000. Euro Stoxx futures seen opening up about 10 basis points weaker on the session. 4,900 is where we're at. One of the major performers yesterday was UBS, as we spoke about. Quick look at U.S. Treasuries as well. We're coming off a successful 3-year Treasury auction yesterday, giving a bit of a bid to 2-year yields. Today, you can see they're trading sideways at around 4.84, still around 20 basis points lower than that Fed meeting last week. 10-year also sitting at around 4.46%. Final quick check of oil. This is the picture for crude markets as we head into the close, slightly weaker on the session. But there is plenty more to come. And of course, we will be back with you tomorrow, same time. This is Horizons Middle East and Africa.